Unemployment tops 10%, 10.2, and gold hits 1100. Doesn't surprise me that gold hit 1100, and doesn't surprise me that unemployment's at 10.2%. Wow, the worst since June of '83. And here we are in the markets, the S&P daily. We had broke down and we came up. We made a higher high, higher low today. Bulls were in control. And as we said yesterday that we'd have resistance at 1070, 1073, and today's high was 1071 and a half. So there's our resistance, stopping right here at the 20-day moving average. This is called a bear pullback. You get this drop, 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 a little bear pullback to a resistance area. Very juicy short opportunity here, if and only if we go lower than we close. Let me be very clear there. We close lower than today's low. That means we need to close below 1059.32. So if we can close below 1059 on Monday or Tuesday, that would be a bearish read. I would especially like for us to get underneath that 50-day moving average, which would put us, we need to really get below 1055. That would be ideal. If we can close below 1055, ideal on the bear side, that is, coming down. Now, I'm not nearly as excited about going bullish here unless we were to blast through this line. If we were to blast through this line, we'd already be up 1, 2, 3 days. It'd be fourth day, so we're pretty extended. But we are in the makings of a lower swing high, which would be very damning to the markets, and that could spell trouble. And so this is some serious thunder out there. I love this little bounce. We have a lot of bulls coming into this, and that gives the bears a great opportunity to short if in fact the markets do start to break down. Now we need to always look at volume to see how volume is playing a part. We're going to go to the spiders, and as you can see here on the down leg we had an increase of volume. So let me draw just a couple lines here. So as we were dropping here, we were rising there. And then as we're rising here, we're dropping here. That confirms this being a bear pullback. There is hardly any juice, not a lot of juice at all, on this little up leg that we received in the S&P. Let's go back here and look at the weekly. I'm going to pull the weekly over. In the weekly, we have this rising wedge with a it's almost a double top, not a divergence per se. We did break down on the weekly, and then we come right back up. So on the weekly, it looks like we're just above that resistance line, which is bullish. We have almost a tweezers reversal pattern and a piercing pattern in one. So the weekly is looking pretty bullish to me if it can get back over that line. But if I were to snug this line up to this one, we wouldn't quite be over that yet. All I did was snugged it up there. And let me go back. Support on the wick, support on the body, support on the body. We broke it. Now it's acting as resistance. Even though we still have almost a tweezers, not quite, in a piercing pattern, it still has to bust up through that. So we'll see how the weekly does, and let's see what the monthly is doing. The monthly hasn't moved too much. We still have higher highs, higher highs, higher highs, higher highs, a lower high. So the question is, where will we go? A good little thing you can do here is draw from wicks, shadows. You can see a shadow right here. So what I'm going to do is draw a line from this shadow. I'm going to bring it down. Almost nailed it to this shadow right there. So I have a secondary line. Let me do this. I'm going to make the color cyan. And there it is. So now with wick to wick, how high can this candlestick go? Well, as far as the shadows are concerned, these other two highs, we could actually get up around 1080. 1080 would be a big resistance area. It was there for this candlestick. It could act as that here. So I wouldn't mind seeing this month get up to 1080 range, and then start its descent and seeing a close below the 1015 area. If we can get a close below 1015, then we should be off to the races to the downside. And remember, stocks like to drop 66% faster than they rise. So if the markets do in fact break down, there are some great opportunities for shorting. Matter of fact, I will be doing the V newsletter for this week, and there are some juicy shorting opportunities on there, and we should all make some great money if the markets go down. But just in case, if the markets do want to continue northbound, at that point I will also be talking about some very nice setups on our bull list. Remember, these lists are fundamentally very sound, meaning a whole plethora of metrics to meet these criteria that we need for both the bull and the bear list. So it helps with the probabilities in our trading. I want to also pull in the NASDAQ just to see what's going on. The NASDAQ broke down. We're rising. We're finding resistance at the 20-day. We are above the 50-day. So we do have resistance right now. Just like the S&P, the MACD is below the zero line, coming right up to it. And let's bring the weekly in. The weekly, as we broke down, we come back up. We have almost a tweezers and a piercing. I mean, the NASDAQ and the S&P look very similar. The only difference is we're not at resistance yet on the NASDAQ. Let's see what's going on the monthly. The monthly looks like the strongest thing going here. We busted through resistance. We're above the 100-day moving average, which is acting as support. And then we have the 50, did I say day? 100-month moving average acting as support. The 50-month moving average acting as resistance. We have a high base formation playing out, and we are above the zero line here on the MACD, and we have a down ticking formation taking place on the histogram, and it looks like we're getting ready to turn over. If we do flip over, we'd get a negative tick, and that would bring us down with some major support down here in the 1850 to the 1825 area. So there you are for the weekend edition. Thank you for being a part of us and here at Free Trading Videos. If you want to be mentored and go to a very high level of trading education to where you are doing what the other 95% of all traders are not doing, to best position yourself to be in the 5% range of making money, and not just making profits but consistent profits, feel free to be part of our Tuesday evening conference call. It's called Meet the Mentor, and it is both Matador and myself come on. We introduce ourselves, and we talk live. We talk with you all, and we just tell you a little more about it. If you are interested to learn a little more about what we do, feel free to go to freetradingvideos.com, click on services, and fill out the little form. And even leave us a comment about yourself, a little bit about yourself, and your information is safe with us, and we'll be getting back in touch with you with a private invitation to join us. So happy trading to each and every one of you, and for those that will be in Vegas, look forward to seeing you at the Traders Expo.